Good morning, students. Welcome back. So today we'll start with other topics. So a couple of topics we have planned: group audit and internal audit. So if you look at the requirements of control systems, or if you talk about the risk management process for a company, internal audit is a very critical area as far as that management process is concerned. Okay. In these days, focus of the management has significantly increased as regards this area. So I would say a very important area from the perspective of the management. Further, if you look at the companies which have got a lot of investments, okay, or if you talk about those setups wherein there are groups in the form that a promoter has got various companies, okay, so holding companies there, a lot of subsidiaries are there, associates, joint ventures. So that is what comprises of a group. Okay, so in that case, what do you find? In that case, you find that there are some peculiar requirements in relation to the audit of that particular group as far as reporting requirements are concerned, which is also called as audit of consolidated financial statements, okay, which will cover through this aspect related to group audit. All right. So these are the couple of topics we have planned for today. Yeah. So what I'll do is I'll just first of all start on with the internal audit. Now, as we discussed, you can say it's a part of the process which is related to the risk management system of the organization. Now, what do you mean by that? So we can say that every organization will do its risk assessment. Now, this risk assessment that we are talking about is not only in relation to the financial statements, because over here, the focus or the scope is not limited to the financial statements. It goes beyond that. Yeah. Now, that may include some of the aspects related to non-financial matters as well. Or you can say that will apply actually to the organization as a whole. Yeah, so that's the thing we are required to really look at as far as the management process is concerned. And that's how the management will want to take care of some of these requirements. Now, in that context, what the management will do is, first of all, they will assess the risk. Yes or no? Yeah. They will assess the risk. Means, what are the risks to which the management is exposed to in terms of various activities that they will have during the year. And in relation to all of those risks, what they will want to do is they will also want to set up some internal controls, right? Now, when we talk about those controls as against those various risks, what do you call it as? This document is quite common. Huh? This is what you call as a risk control matrix. Now, why do the management would have this document in place? Because they want to set up a system. And that system is essential for smooth functioning, efficient functioning, and to also take care of some of those concerns, some of those risks, correct? And that's what you call as risk management system, risk management process for an organization, right? Now, as regards this risk management process, we have got one internal audit function. Now, what is that internal audit function? So let's try to understand about that internal audit function. So what do you mean by that internal audit function? We will cover in that. Okay. So let's try to understand as to what do we have in this internal audit function. So this internal audit is an independent management function. Now this is important. That's why we are calling it as a part of the process of the management, which involves continuous and critical appraisal of the functioning of an entity with a view to suggest improvements thereto and add value to and strengthen the overall governance mechanism of the entity, including entity's strategic risk management and internal control system. Okay. Now, because of this, you can understand that internal audit is not only talking about the financial statements or the financial reporting or the controls related to the financials part. No, it actually applies to this entire organization. Okay. So it's something which flows to organization as a whole. So that's what we are required to look into as far as the internal audit is concerned. Now, as regards this internal audit, now here again we have some peculiar requirements. Internal auditor is also expected to be independent. Now this is similar to what you see in case of statutory auditor. Why? Because here again the function, the role involves review. Yeah. And that's why it's very important that this function has to be unbiased as far as the organization is concerned. In fact, in respect of internal audit, this becomes all the more challenging when the internal audit function happens to be a part, means you do not have an external consultant involved for performing this internal audit. Yes or no? So the management can also have their one of their departments who will play this role of internal audit. Correct. So you can say the people who are involved, they are very much part of the organization only, who are playing this internal audit. Yeah. So that is where this becomes all the more challenging, and that is why a lot of complexities could be involved as far as this aspect of independence is involved. Okay. Now, when we talk about this internal audit, so does it apply to each and every entity? Answer is no. Okay, so internal audit does not apply to each and every entity. So you can say that this again goes by the criteria. Okay, so we need to look at the criteria, so which is prescribed as to where an internal audit will apply. Now, an internal auditor may be either an individual or a partnership firm or a body corporate. Now, it could be any structure. Okay. Now, what is the requirement? What is the criteria for the internal auditor to be in place? So let's try to understand that. As far as listed company is concerned, therein it is mandatory. But when we talk about unlisted companies, okay, so then we need to segregate between public companies and private companies. Means public limited and private limited companies. Now, every unlisted public company having paid up share capital of 50 crore or more, or turnover of 200 crore or more. Okay. Or outstanding loans or borrowings from banks or public financial institutions exceeding 100 crore or more at any time during the preceding financial year, or outstanding deposits of 25 crore or more at any point of time during the preceding financial year. Now, if any of these criterias company is able to meet, we are not saying all, anyone, so internal audit becomes mandatory for the company. But when it comes to a private limited company, so therein the criteria is different. So it says turnover of 200 crore or more, or outstanding loans or borrowings from banks or financial institutions exceeding 100 crore or more. So in case of private limited companies, this criteria of deposits and paid up share capital is not there. Yeah, so you can say it's further diluted. Okay, and here again, if the private limited company is able to meet any of these criteria, internal audit becomes mandatory. Okay, now question arises that as regards the internal audit, can a company voluntarily opt for internal audit? Answer is yes. Yeah, so this is the, you can say, the criteria wherein the company will have to necessarily get it done. Okay, means it's mandatory. They will have no choice but to follow this. But if let's suppose there's a company on which internal audit is not applicable and they want to follow this, why would they want to follow this? Okay, with this objective which we discussed. So this is the objective which they will have. Now considering this objective, if they want to have an internal audit system in place, that's completely okay. Okay, so it's not that if the internal audit is not applicable, so the management can't get it done. It's again their choice. If they want to follow this, they can absolutely follow that. There's absolutely no problem in getting it done. Okay, yeah. Okay, so that's why we can say internal audit is of course mandatory, but wherever the management wants to get it done, there is absolutely no problem. Okay, on a voluntary basis as well. Now, who can be the internal auditor for a company? Now, for an internal auditor, unlike statutory audit, it's not mandatory that one has to be a chartered accountant. Okay, or a chartered accountant in practice. Okay, so that sort of mandate is not there. So it's something which requires the relevant skill set. Okay, and if you have the relevant skill set, then you can perform this internal audit. Okay, so it says internal auditor shall either be a chartered accountant or cost accountant, whether engaged in practice or not, or such other professional as may be prescribed, decided by the board. Now, which board is this? Board of directors of the company. So it's up to the company to assess the relevant professional. Okay, and they can just appoint them. Further, the other part that we have talked about is internal auditor may or may not be an employee of the company. Now, which company is this? The same company. So if let's suppose you have PQR Limited. Now they are looking to appoint an internal auditor. So what they can do is either they can engage an external consultant. External means which is not a part of the organization. say they can appoint A, B, C and company. So that is external to the company. Okay. Or maybe they can appoint Mr. P, who can be an individual. That is again external. Or what they can do is they can set this internal audit internally. So they can set up their own department. So which you can say will be in-house. Okay. Which is what you call as a part, or you can say that will be one of the functions, one of the departments of the entity as well. Yeah. And this is where we discussed some sort of complexity arises. Why? Because if let's suppose internal audit function is there, which is a part of the organization. So effectively, the team which will be there in that function, which will play the role of internal auditor. So they happen to be the employees of the company only, right? So they are reporting to the same management or the same board of directors. Now, how do they maintain their independence in that scenario? Okay. In terms of the role which they are expected to play. Why? Because their role is what? Their role is to review the organization. Okay. And which will also include the management. Yes or no? Correct. So that's why this aspect is required to be carefully looked at. And that's how the structure is required to be designed so that the internal auditor can play his role in an unbiased manner. Okay. So that becomes important on the part of the internal auditor. Right. Now, to be effective, internal auditor must be regarded as past part of management. Now, what does it mean? See, it's important to understand the importance of this function. Yes or no? Because if you don't understand the importance of this function, so what will happen? Maybe the internal auditor is doing some work. Okay. And maybe the internal auditor has got some observations, but no further working is done on that. Okay. Or maybe the importance is not given to that role. So will that be able to achieve the desired objective of the organization for which that function has been set up? Answer is no. Okay. So that will become more of a function which has been set up. Okay. Which may not be able to really play that role for which that function has been set up. Yeah. So that's because that's something which is important for the organization to look into. Yes or no? Yeah. So they need to take care of that aspect. And because it's a function which is required to play some role, so you can say that they have some responsibility. Yes or no? They have the responsibility. Now, for that responsibility, they should also be given the appropriate authority. Yeah. So what sort of authority you would want to assign to them? Authority to investigate from the financial angles every phase of the organizational activity under any circumstances. Correct? Yeah. See, till the time the complete review is not performed and a holistic approach is not considered in terms of executing this role, then the desired results may not be achieved. Okay, so that's why it's very important that management considers the importance of this role and accordingly supports the internal audit function or maybe the internal auditor in terms of carrying out various tasks which they will have. And of course, in terms of the recommendations, the suggestions, or maybe the observations, whatever they are going to have, that is again something which is important for the management to look into and to work around that. Okay, because that's how you will be able to strengthen the overall system of the organization. Correct. Now, what are the main responsibilities one can say will be there when it comes to the internal audit? To maintain adequate system of internal control. Okay, to maintain adequate system of internal control by a continuous examination of various functions, procedures, processes, policies. Okay, yeah, and to provide adequate safeguards against misappropriation of assets. Right? So that's an important thing. Okay, so that's to provide adequate safeguards. Now, what can be the misappropriation? So it can be related to anything. Yeah, any of the assets. Right. Maybe there is a cash embezzlement, or maybe there is a theft. Yeah, all of these things are the risks for the management in relation to the assets of the organization. So that's why, what does the management want? That all of these assets are safeguarded. So how do you achieve that? You achieve that through a continuous review. Okay, you achieve that by setting up a strong system so that they remain safeguarded. But somebody will have to keep reviewing the system, that whether that system is operating, number one, operating effectively or not, number two. Yeah, only then the system which has been put in place is of some use. Otherwise, that system is actually of no use. Yes or no? No. Next, to operate independently. Now, this is another requirement which is very important. See, independence, you can say, is the basis for the auditor. Whether it is statutory auditor or internal auditor, so same goes with any auditor. Independence is extremely important. Yeah. So that's why internal auditor must operate in an independent manner, must not in any way divest himself of any of the responsibilities which are placed upon him. Okay, extremely important on the part of the internal auditor. All right, so now when it comes to the internal auditor, he should not involve himself in the performance of executive functions in order that his objective outlook does not get obscured by the creation of vested interest. Again, very important. Okay, so that's something you'll not want the internal auditor to get onto. To observe facts and situations and to bring them to the notice of authorities. Who would otherwise never know them. Now, who are the authorities? So it's the management of the company, it's the governance team, which is about the board of directors, audit committee. Okay. Also, they critically appraise various policies which have been put in place by the management. Draw the attention of the management to any deficiencies. wherever these are required to be corrected. Yes or no? Right? Further, they have the responsibility to associate closely with the management. See, actually, if you look at the internal audit, it's nothing but an extended arm of the management. Yeah. So in a way, this is the role which the management needs to put in place, or you can say a system which is put in place as to how do we ensure that the system is working in an effective manner. So that's what something is the internal auditor is taking care of. So that's why you can say that it's nothing but the role of the management only, which is being played by this internal audit. Correct? So he is required to associate closely with the management. Only then he will get to understand the requirements, systems, policies, procedures, and be able to communicate effectively what the deficiencies are, what the problem areas are, what is required to be done in terms of the improvements. His knowledge must be kept up to date by his being kept informed about all the important occurrences and events affecting the business. See, by knowledge, we are not talking about the technical updates. So we are not talking about the auditing standards, or we are not talking about the legal requirements. We are not talking about any of the further developments which are related to the profession. Of course, that's something you will expect any professional to take care. Okay. Over here, it's about the updates, or it's about the changes which are taking place in the organization as to whether the internal auditor is informed about all those things or not. If let's suppose any change is there, any event is there, any new sort of arrangement is there, a new setup is let's suppose in place. So this internal auditor needs to have an understanding of that. And if there is any change in understanding is required, that is again something which should be passed on to the internal auditor. Okay, so that's what you will expect the internal auditor to do, right? Okay, he must enjoy an independent status. So I think this is quite focused upon. Why? Because this is again the basic premise with which this function will work. Okay, so if you do not have this in place, then of course the entire objective of internal audit goes off. Yeah. Now, audit committee of the company, wherever that is applicable, or the board, shall in consultation with internal auditor formulate the scope, functioning, periodicity, methodology for conducting the internal audit. Okay, so what does it mean? When it comes to the role, the scope, what the internal auditor is required to do, how frequently is that required to be done? Okay, and if there are any approaches he needs to consider in terms of the methodology. So who will decide that? Of course, that will be consulted, but it's the governance system, which is about what? Audit committee. So they will decide this. And generally what will happen is that when it comes to maybe a small setup, in terms of the size of the entity, if you look at a small entity, see therein, of course, depending on again the internal audit function, you have a lot of things which can be covered up. in a short span of time. Why? Because the organization size is such, right? If let's suppose you talk about a large organization, so what will you do as an internal auditor? So it's like for you to complete the review, for you to look into the things, you will require some time. Yeah, because it's not about statutory audit that you come over, you look at the financial statements and you're through. You are basically required to look at the entire organization in terms of its functioning effectively. Yeah, and that's what you are required to review. So you will also have to have an understanding about them, and then of course basis that you will be getting onto the reviews. Now for that to be put in place, for that to be executed, for that to be carried out, what do you need? You need to have a proper process. Okay, you need to have a proper scoping, and you need to have an appropriate plan as to how do you do this. Okay, so if let's suppose we talk about a financial year, maybe in a particular quarter, internal auditor has decided that maybe they will pick up process 1 and 2, which could be related to say capex, which could be related to opex. Okay, let's suppose in Q2, what they have decided is now they will be looking into the revenue cycle. Okay, Q3, let's suppose they have decided that in Q3 they will be focusing upon some other areas, for example, accruals. Okay, or maybe they will also be looking at the loans and advances. Okay, some of the things related to that system which is there in the organization. And Q4, they are going to focus upon some different areas. Yeah, so that's how you can say they can always decide their scope and decide their mechanism of functioning. And in terms of its coverage, so if let's suppose a particular area is required to be looked at, so what is going to be the coverage? Is there anything that they need to focus upon? And that is where you generally see the involvement of statutory auditor as well. Okay, so you'll also generally find that statutory auditor is also looped in terms of deciding this scope, functioning, periodicity, methodology. Why? Because eventually some of these things are also going to help the statutory auditor. Yes or no? Yeah. So they are also going to get benefited due to this. Correct. So that's why they may be involved. So idea is not that they will be playing this role or they will be deciding as to what is required to be done, but they can always advise them as to what are the other areas which are important, which they may not have picked up for their review, maybe during a particular period or maybe during the approach which they are considering, or maybe that there are some problem areas which are troubling the statutory auditor and they want an internal auditor to look into so that the management can take care of that in an appropriate manner, in a timely manner before the statutory audit is started. Yeah, because what is the overall objective? Overall objective is to improve the systems and to ensure that the systems are in place the way the management would always want them to be. Correct? Yeah. So practically, of course, if you look at the company, so they will also sit down with the internal auditor. They will decide this. Then some sort of discussion at times you also find that taking place with the statutory auditor. So the inputs of statutory auditors are also taken. And that's how this entire functioning or the scoping is decided. And which only benefits the organization as a whole. Why? Because if the system of statutory audit requires some improvement and if the management is able to do that, so that will only smoothen the entire process, right? Because when statutory audit is required to be performed at that point of time, if let's suppose some of the things are required which have been taken care of, so what will happen? That will only help the organization. Correct? Yeah. So these are some of the things which are important to be looked into. Now, let's talk about this management function and the scoping part of internal audit. See, management is a process actually. Now, again, if you talk about the management, so management comprises of people. But why do we have those people as a part of the management? Because they need to play some role. Yes or no? They will also have some role and responsibilities which are assigned. So it's a process by which affairs of the entity are conducted in such a manner that its goals and objectives are attained through optimum utilization of all available resources. Correct. Now, to achieve this, what do they do? Management should determine goals and objectives, quantify them, develop policies, plans, implement them, exercise control over such implementation. Now, this part is important. Exercising control over implementation. Why? Because without this, there is a risk that some of these things may not be achieved. So we are not saying that it will always happen that these will not be achieved, but there is always a risk. Okay, they may not be achieved. Now, each of the managerial functions should constantly be viewed by the internal auditor. Scope of internal auditor's work should include a review of, right? Now, on the basis of such review, what do? Internal auditor should in his report highlight the weaknesses. That's something you'll always expect the internal auditor to do. And also give suggestions for the improvement. See, idea is not only to find the problems. Idea is to identify the problems or the weaknesses or the improvements required and to work upon them so that those sort of observations do not arise again. Yes or no? Yeah. So idea is to actually kill the problem. If let's suppose the problem exists. And for that, it is very important that some sort of action plan is put in place. So if you look at the internal audit report, you'll not only find the observations, you'll also find a solution to those problems. Okay, that is essential. Right? So now, what do you have as part of this scoping? First of all, will be about the review of internal control system and procedures. Now, in this case, when we talk about review of internal control systems and procedures, review of custodianship and safeguarding of assets, review of compliance with policies, plans, procedures, and regulations, review of the information as to whether it is relevant, reliable, or not, review of the structure of the organization, utilization of resources which are there, accomplishment of goals and objectives. Now, in this case, what do? So these are some of the scoping areas. And for all of these areas which are required to be worked upon, what will you have? So as part of the internal audit function, you will have a bifurcation, okay, which is similar to what we just discussed over here. Okay, as to what is it that they are going to do and when. Because you can say that review of all of these things that we are talking about is nothing but review of various processes of the organization. Yes or no? Yeah. So actually they will be reviewing everything. Yeah. Now, as regards the internal auditor, you can say there are some qualities which you'll want the internal auditors to have. And it's not about that it's good that the internal auditor should have this quality. No. So we are not talking about that something which is good for them. It's all about something which is essential, okay, which is a sort of necessity for them. So that's what we are talking about. Okay, so it's like a necessity. Now, as regards the internal audit, now what are those necessities? You can say, what are those qualities? One, you will expect them to be straightforward, honest, sincere in his approach, right? You will expect them to be fair and those who do not allow any sort of prejudice or bias to override his objectivity. Again, very, very important. They should maintain an impartial attitude. Yes or no? Again, very important. Should not only be independent in fact, but also appear to be independent. Yeah, so it's not something that you'll want them that they are independent only in relation to that particular working. See, their overall approach has to be the one which is independent. Okay, only then they will be able to do the justice to their work. Internal auditors should not, therefore, to the extent possible, undertake activities which are or might appear to be incompatible with his independence and objectivity. Okay. Yeah. Now, what are the qualifications of the internal auditor? So let's look at that. They should have special expertise. You'll expect them to have this, which is a necessary for evaluating management control systems, especially financial and accounting controls. The financial reporting, or you can say financial systems, or you can say the systems which are around finance, they are very critical for the functioning of an organization anyways. So again, we are not saying that the objective is that somewhere the internal auditor will be focusing upon more, somewhere he'll not be focusing upon less. That he will have to evaluate always. Again, depending on the size, depending on the complexity involved. But one area which is critical and which is generally found to be quite important happens to be the financial matters. Okay, so that's where you will expect the internal auditor to have expertise. Now we are talking about the professional qualification. Okay, in terms of doing the review. So how can you actually perform the review? So you can perform the review only when you'll have the skill set. Yes or no? So when you have the relevant skill set, because if the skill set is not there, you will not be able to perform the review. Of course, you will go try to have the knowledge around it, try to have an understanding about it. But what is your role as an auditor? Your role is to check, okay, means what was required to be done, whether that has been done correctly in an appropriate manner or not. And over there, you want to suggest the improvements. So how do you achieve that? So you achieve that only when you are able to maybe add on to that. Yes or no? And that is possible only when you have an understanding of that and you have a better understanding of that. Correct? Because if let's suppose your understanding is lesser than what the management is having, then how do you add value to that? Or how do you even suggest improvements to that? Okay. Or how do you actually go look into it whether the thing is done in an appropriate manner or not? For you to do that, for you to suggest improvements, for you to look into it, it's essential. Yeah, so that's why we are talking about the expertise and not only about the knowledge. Yeah, so it's something over which special expertise has to be there. Correct? Next. Accounting and finance functions provide basic data for the management control of an enterprise. Therefore, internal auditor must have accounting and financial expertise. Okay, so that's why this expertise is required. Internal auditor is also expected to evaluate operational performance and non-monetary operational controls. Something that we have been talking about, that it's on again not limited to the financial aspects or the financial reporting or around the financial statements. It actually goes beyond that. Okay, it's also about non-financial matters. So the operational aspects are also required to be looked into, for which the basic knowledge is required of the technology and commercial practices. Yes or no? Now here you can say the basic knowledge is expected. So that doesn't mean that somebody should not have the expertise. So of course that if that is done, or if that is there, that will only help the system, that will only help the process. But here the expectation is not about that. Why? Because to look into different companies or the organizations or the industries and to have that expert knowledge may not be available. Yeah? Though these days competency has increased quite significantly and you have the industry experts available to look into some of these practices, to look into some of these technologies as well. So practically, if you go look into the functions, so this is what the organization will want, that the internal auditor who is there, he should also have the expertise around this. And the idea is very simple, that you want to add to what is being done. Okay, and that is only possible when you have a better understanding. Otherwise, you will not be able to add on to what is there with the organization. Yes or no? Correct. Now, he should also have a basic knowledge of commerce, laws, taxation, cost accounting, economics, quantitative methods, EDP systems. Now, this is essentially required. Why? Because for the functioning of the organization, all these things become important. Correct. And for the functioning of various systems, various departments, all of these things become essential. So no, an understanding of management principles and techniques is also another essential qualification of an internal auditor, as also the ability to deal with people. See, when it comes to an audit, audit is actually about a job which is related to the people management in a way. Why? Because when, let's suppose, an internal auditor is doing the audit, so he's required to deal with people. And it's not only one person that he is going to deal with. He's going to deal with multiple persons across the organization. He's required to talk to them. He's required to inquire them. He's required to, sort of obtain information from them, review their work, suggest improvements. So that's why ability to deal with people is very important. Correct? Yeah. So this ability, if let's suppose is not there, then this function may become not so effective, one can say. Yeah. So that can be a sort of challenge. So that's important on the part of the internal auditor. By his conduct, the internal auditor should provide assurance to the management about what? About confidentiality of such information. Now, this again, you will say is a basic expectation, and which is something similar to, you can say, the independence. See, independence is something which is given, which has to be in place. Yes or no? Only then the internal auditor will be able to play the role the way it is required to be done. Similarly, when it comes to the internal audit, so the internal auditor will have access to a lot of information of the management. Yes or no? So now that information is something which is critical and over which the confidentiality is required. Yeah, because that can have a huge bearing on the way the organization is functioning if that confidentiality is not maintained. Correct? Yeah, so you can say this is again a basic aspect or the basic requirement as well as the mandatory requirement on the part of any such review function, whether it is about again statutory audit as well as internal audit. Okay, yeah. Now, see, if you look at two functions, statutory audit, or you can say two jobs related to statutory audit and internal audit. So statutory audit, we use this term in relation to the audit of financial statements, which is also very commonly called as an external audit. So we have discussed that actually, in a way, internal auditor is not only helping the management, internal auditor is also helping the statutory audit. Why? Because in a way, management is supposed to help the external auditor. Yes or no? Because at the end, audit is what? Audit is about the financial statements of the company. So it's something which is a responsibility of the management to get it done. Yeah, so how are these two linked to each other? So let's try to understand. Hope and objective of internal audit are dependent upon size and structure. Correct? And beyond that, if there are any specific requirements of the management. Okay. Internal auditor operates in various areas. For example, review of accounting system, internal control. Okay, some of these things we have already talked about. While operating in these areas, there is a lot of overlapping. Overlap means, see, the statutory auditor will come, he will also review the thing. Internal auditor is there, he will also review something. Now that's something may be common at times or maybe a lot of times. Yes or no? Yeah. So that's what we are calling as an overlap here. Now, idea should be to minimize the overlap. See, we are not trying to cut down on the scope of any of these parties. And that is not really the objective here. Idea is to make it more efficient so that one thing which is looked at by one party, if the other party wants to look at it, they can of course look at it. But if the party which has already looked at it, they can provide the relevant information, the outcome to the other party. So the other party can minimize the review of the same thing and focus upon the other things. So that is actually going to help the organization. Yes or no? So the work which is done by internal auditor has an important bearing on the work performed by statutory auditor. Why? Because the evaluation of the internal auditor in respect of controls, financial information, verification of assets, this is required by the external auditor. Okay. So you can say function of internal auditor is an integral part of the system of internal control. And the stronger the internal control system, okay, the more and more comfort statutory auditor will be able to derive. Yes or no? Yeah, so that is something which is extremely important. So it's a statutory requirement also. So if you look at the requirements of Companies Act, okay, wherein we discuss that when it comes to the scope, functioning, okay, some of these things, who will decide this? So this will be decided in consultation with the auditor by audit committee, board of directors, wherein you find it obligatory for a statutory auditor to examine the scope and effectiveness of work carried out by internal auditor. Why? Because, see, again, internal audit is what? Internal audit effectively is a system of the organization. And later on, when the statutory auditor will come, so statutory auditor will also want to look at any systems which is going to have an impact on the financial reporting. Yes or no? Correct. So this system is also going to have an impact on that. So that's why its scope and effectiveness will only help the statutory auditor. Okay, so the extent of independence which is exhibited by internal auditor in the discharge of his duties, his status in the organization, all of these things will decide what? All of these things will decide as regards the outcome of the internal audit. How effective is that? Yes or no? Because that will become effective only and only when you have some of these things in place. Otherwise not. Yes or no? But so far, the practice of audit being conducted jointly by internal auditors is of great assistance. See, external auditor will not be placing reliance on the work of the internal auditor, but he will definitely be using that work. Okay. Yeah. So that can be a support function for him. So you can't say, okay, that three areas are looked at by the internal auditor, so I'll not look into it, and whatever he has done, I'll just use that as it is. No, he will do some review, but not to the extent maybe the way the internal auditor has already done. So that's how he can just decide, first of all, whether he wants to take that approach or whether it will be appropriate to take that approach or not. Sorry. Okay, or whether that will be appropriate to take that approach or not. So if that is appropriate, there's absolutely no problem in doing that. Yeah. So now what is the difference between these two? Internal audit. It's performed by independent internal audit function or external party. So either of them can do this. But when it comes to external audit means statutory audit. So you should also read this as statutory audit means the audit of financial statements. Okay. So it's an audit function which is performed by independent body, no doubt. But that has to be an external party always. When it comes to the internal audit, so internal auditor will examine the adequacy of operational controls. And we are not talking about financial reporting over here. So it extends to organization as a whole. When it comes to external audit, so they will be focused around the financial statements. Okay. So you can say it's a limited approach which they will have. Internal auditor is appointed by audit committee or board of directors. Okay. External auditor is appointed by the members of the company, shareholders. Of course, they are first of all selected, recommended, but eventually that is approved by the shareholders, members. Right? Internal audit report is used by top management. Of course, they will require this. And is also referred to by the statutory auditor. So they will also be using that. But when it comes to the report of external audit, so that is something which is meant for the external parties, various stakeholders. Of course, the management will also be looking into it, but stakeholders. Internal audit report provides weaknesses in internal controls, if any, effectiveness of operational activities. But statutory auditor will only provide an opinion as to whether the financial statements provided true and fair view or not. That's it. Internal auditor could be an employee of the company. So that's something we have already discussed, that he could be an internal thing. So he could be an employee, but external auditor cannot be an employee. Okay? So that sort of thing is not something you'll find in case of external audit. Okay. Yeah. Now, there's also an auditing standard which talks about using the work of internal auditor. Okay, which deals with some of these aspects related to the interplay that you'll have, or you can say how the work of this internal auditor can be used by the external auditor. Yeah, so some of those things you can always go look into this in detail in this auditing standard as well. Yeah, largely in line with what we have discussed. Okay, but something over which you can also have a maybe a detailed look, right? So I would say this was about the internal audit. Now, to further get on to our understanding, what we can do is we can just look at some questions now. Yeah, but that's the whole idea, to get into the questions. So let's look at some of these questions. All right, so let's look at this. One of the independent directors sought information regarding the appointment of internal auditors for the following group companies in accordance with the Companies Act, of which certain financial information is given below. Figures are rupees in crore and they correspond to the previous year. Means for the financial year which has just been closed, okay, for that data you will be provided. So we are given the company information about its share capital, turnover, okay, any loans which the company may be having from bank or financial institutions, and any public deposits which they may have. You are required to evaluate what the requirements regarding appointment of internal auditor for these companies. Very simply, you are required to check for which of this company internal audit will be applicable. Means where do you have that applicability criteria as per the Companies Act? Simple. Yeah. So we have already looked at it. So when it comes to a listed company, so therein it is mandatory. Yes or no? Yeah. For the unlisted companies, we discussed that there's some criteria they need to check. Okay. For the listed companies, do you need to get onto the criteria? Not really. So therein, you don't need to get onto that criteria. Right? Yes or no? Good. So we have Saminathan also. Saminathan, if you can just also look at this and help me understand as to which of these entities you think internal audit will be applicable. Okay, so I'll also start on to this. All right, so let's look at this. Following class of companies shall be required to appoint an internal auditor or a firm of internal auditors. 1. Every listed company. Yes or no? So every listed company needs to have that in place. Correct? Then, what is the next criteria? For unlisted public limited companies. It's based on share capital, which has to be 50 crores or more. Turnover, 200 crores or more. Loans or borrowings, 100 crore or more. Okay. Deposits, 25 crore or more. When it comes to a private limited company, so what do you check? Turnover, 200 crore or more. Loans or borrowings, that is 100 crore or right? Now, in the given case, if you go back to that chart, XYX, it's a listed company. So do we need to look into their paid up share capital, turnover, etc.? No, it's straightforward. Every listed company is required to appoint internal auditor. Okay, so that's why, what do you have? That's why you will have that requirement for XYX. That's quite straightforward. Correct. Further, if we look at M&M Limited, okay, M&M Limited. Now, if you look at this second company, M&M Limited, this is unlisted public company. Now, in this case, equity share capital is, what is the criteria? 50 crore or more, it is more. Turnover, what is the criteria? 200 crore or more? No, it is not. Loans, it should be 100 crore or more? No. Deposits, it should be 25 crore or more? No. Only one of the criteria is met. So now what is the requirement? Do we need to meet all the criterias or one of the criterias? Only one. It says or, it's not and. So that's why, because it is having 60 crore as equity share capital, which is exceeding the required limit. So that's why for them, internal audit will also be required. Okay, for them as well, this becomes mandatory. Correct? Now, let's look at this third company, that is GFG. Now, in case of unlisted private limited company, what are the two criteria? Turnover and loan. So do we need to go by this? No. Do we need to go by this? No. Only two things are required to be checked: turnover and loan. Turnover criteria, is that met? No. Loan criteria again, is that met? No. So in case of GFG, is there any criteria which is met? No. Okay, so therefore for GFG, what do you have? It is not required to appoint. Yeah, so that's why what will you have? XYX, M&M. For them it is mandatory. For them it is mandatory. But for GFG, it is not mandatory. Now the question arises, if GFG wants to appoint an internal auditor, can they do that? Or is there anything stopping them from doing that? No. So if they want to voluntarily opt for this, means they want to appoint an internal auditor, can they do this? Answer is yes, they can appoint the internal auditor. There is absolutely no problem in doing that. Okay, yeah. So I think Saminathan wants to speak. So Saminathan, every time you want to speak, I think you'll have to raise hand. Huh? Okay, so once you raise hand, that's when the relevant team will unmute you. Yeah, so if you want to speak, please raise hand. If there is anything you want to discuss, speak about, please raise hand so that. Yeah, so is there anything we can discuss, Aminathan? You can raise hand. Over to you. No? All right. Okay. All right. So let's look at the next one. Rishi is appointed as internal auditor for SPOM Limited. Okay, it's a medium-sized manufacturing company wherein CA Nitin is the statutory auditor. Okay, now during the review, what has happened? Rishi notices several discrepancies in the disbursement records and suspects there might be weaknesses in the internal control system. Additionally, there have been recent changes in the company's business policies that he was not informed about. Okay, now Rishi is concerned about maintaining his independence and objectivity while ensuring that the management is aware of these issues. So, what are the responsibilities of Rishi as an internal auditor with respect to the accounting function and financial records of the organization? Yeah. So, anyone would like to answer this? Any thoughts on this? So, let's look at this, right? In the given case, Rishi has noticed several discrepancies in the disbursement records. And Rishi suspects there might be weaknesses in the internal. So he is concerned about maintaining his independence. So that's the concern. Objectivity. Correct. So what are his responsibilities? To ascertain adequacy of internal control system. Okay. To operate independently, not to involve in performance of executive functions, to observe facts and situations and bring them to the notice of authorities. Who would otherwise never know them. Also critically appraise various policies of the management and draw its attention to any deficiencies wherever these are required to be corrected. Further, to associate closely with the management, okay, and to keep knowledge up to date by being informed about all the important occurrences, events which are affecting the business, as well as changes that are made in the business policies. At all times, internal auditor must remain independent. Now, this is essential, something that we have focused upon quite a lot. Yes or no? So that's something you'll always expect the internal auditor to sort of, have in place. Correct? Yeah. So this is something which you'll always expect on the part of the internal auditor. Right? So I think with this, we can just continue with some more questions, but I think we can take a break now. Yeah. So Manish, I think we can take a break now and then we'll continue with our discussion. All right. So let's meet after 15 minutes. Huh? All right, so let's continue. So moving on to the next one. Rishi is appointed as internal auditor, okay, for the same company. CA Nitin, which is the statutory auditor, asked Rishi to provide direct assistance to him regarding evaluating the appropriateness of management's use of going concern assumption. Okay, so this is what the statutory auditor is expecting the Rishi to do. Now, in this relation, whether statutory auditor can ask the internal auditor in relation to such direct assistance. Okay, yeah, so that's the thing we need to look into. So what are your thoughts? Yeah, so let's look at this. So now, what is appropriate in the circumstances? So if you look at the requirements of the auditing standard SA 610, which is about using the work of internal audit, external auditor shall not use internal auditors to provide direct assistance to perform procedures that involve making significant judgments in the audit. Okay. Now, since the external auditor has sole responsibility for the audit function expressed, external auditor needs to make significant judgments in the audit engagement. Now, what are those significant judgments? They include assessing the risk of material misstatement, evaluating the sufficiency of tests performed, evaluating the appropriateness of management's use of going concern assumption, evaluating significant accounting estimates, evaluating the adequacy of disclosures in the financial statements and other matters. Okay. Therefore, we can say that the statutory auditor cannot ask direct assistance from internal auditors regarding evaluating the appropriateness of management's use of going concern. Okay. Yeah, clear on this? Next. CA Sanjana has recently joined as Chief Internal Auditor of Upscale Limited. So it's a listed company, right? Her subordinate staff in the internal audit department brings to her knowledge many prior audit issues highlighted in the previous internal audit reports, which are still open. Does she have any responsibilities in this regard? Okay. And how should she really deal with this situation? Okay, so what do we do about it as a chief internal auditor? So that's the thing we are required to look into, right? Now, in the given situation, CA Sanjana has recently joined. Okay, what's her role? Chief internal auditor. Now, as a chief internal auditor, she is responsible for continuously monitoring the closure of prior audit issues. through timely implementation of action plans in the past audits. This shall be done with a formal monitoring process, elements of which are pre-agreed with the management and those charged with governance. So now, if you look at the responsibility to implement the action plans, that remains with the management. Yes or no? Because it's eventually the management who is responsible. In monitoring and reporting of prior audit issues, responsibility of CA Sanjana as an internal auditor is usually in the form of action taken report of previous audits. The term monitoring and reporting, now this is important, refers to periodic tracking of issues. Okay. As well as evaluation of corrective actions. Okay. And to report upon any open and pending matters to the management and those charged with governance. Now, this is something which you will see as a responsibility. CA Sanjana should review whether a follow-up action is taken by the management on the basis of his report. If no action is taken within a reasonable time, she should draw the attention of the management to it. Where the management has not acted upon the suggestions or not implemented the prescribed recommendations, she needs to look into it as to why that has not been done. Where the management has accepted the recommendations of CA Sanjana and initiated the necessary action, she should periodically review the manner, extent of implementation of recommendations, and report to the management highlighting the recommendations which have not been implemented either fully or partly. See, as an internal auditor, what is your role? Your role is not only to come up with the observation, but to ensure that the corrective action or any improvement is taken. Okay. And you need to track this, because eventually to get it done will be the responsibility of the management. But as an internal auditor, you can't say I've just reported it and that's it. So if that, let's suppose no working is done on that, so you need to pick it up again. You need to ask the management again. Okay, and if the management is not doing that, you need to ask them as to why they are not doing that. Because every time there will be an action plan which will be decided, which will be agreed. Okay, if that has been decided, that's been agreed that this is something which the management will sort of implement. So why that is not being done? Because there will always be a time plan to it. Okay, so within that time plan, if that is not done, it's the auditor who needs to find out. Correct? All right, so now moving on to the next one. STU and Associates have been the statutory auditors of the listed company, First and Last Limited. So now this company is operating in the petrochemical industry for the past 3 years. CAK, who is the engagement partner, had designed certain substantive procedures on some selected assertions in response to the assessed risk of material misstatement for the year under audit. These assertions were not examined by him in the previous years due to materiality, or you can say some other risk considerations. These were not examined in the previous years. Okay, now Mr. X leads the internal audit department of this company and reports to the audit committee. Now, during the audit, means internal audit, a senior member of the engagement team decides to engage. During it's not the internal audit, it's the statutory audit. Okay, so during the statutory audit, a senior member of the statutory audit engagement team decides to engage Mr. X to provide direct assistance in performing the above substantive procedures. So I think we have already talked about it. Comment with respect to the relevant auditing standard. Also, indicate the activities to be performed by the statutory auditor prior to using internal auditor for providing direct assistance. Okay, so that complete guidance is what you need to comment upon. You need to sort of explain, right? So now, in this case, we have talked about it in the earlier question as well. It's the auditing standard 610 that deals with this, using the work of internal auditor. Okay, and what does it require? It states that in determining the nature of work that may be assigned to the internal auditors, external auditor is careful to limit such work to those areas that would be appropriate to be assigned. Examples of activities and tasks that would not be appropriate to use internal auditors to provide direct assistance include discussion of fraud risks, determination of unannounced audit procedures. In the above case, engagement partner had designed certain substantive procedures on some selected assertions. Okay. Such assertions were not tested by him in the previous years. Again, on the basis of his assessment, it is being done now for incorporating an element of unpredictability in the audit procedures. Why? Because individuals within the company who are familiar with the audit procedures normally performed on engagements may be more able to conceal the fraudulent financial reporting. Therefore, in such matters, using an internal auditor to provide direct assistance could prove to be counterproductive and defeat the very purpose of designing such substantive procedures. Hence, that decision to engage this auditor, okay, on the above said matters, that is not proper. That is not in accordance with what the auditing standards will require. Okay. Now, as regards the second part of the question, so this was the first part. What is the second part? Indicate the activities to be performed by the statutory auditor prior to using internal auditor for providing direct assistance. Okay, now, prior to using internal auditors to provide direct assistance for the purposes of audit, external auditors shall, now let's look at those activities. Obtain a written agreement. So there has to be an arrangement between these two parties. Yeah, that the internal auditors will be allowed to follow instructions of external auditor and the entity will not intervene in that work which the internal auditor performs on behalf of external auditor, because that's the work of external auditor actually. Correct? There will be an arrangement between external auditor, internal auditor. Next, obtain written agreement from the internal auditors that they will keep the confidentiality. This is again important. Yes or no? Right? Next, management of High Limited is concerned with the reporting requirement cast through Rule 11 of the company's Audit and Auditors Rules 2014 for the financial year 23-24 in respect of audit trail. Okay, so the audit log which is required to be in place. Okay. Audit trails may be enabled at the accounting software level depending on the features available in such software, or same may be captured directly in the database underlying such accounting software. So either of these things could be there. Consequently, the management of the company approached CAJ and asked him to suggest list of internal controls which may be required to be implemented and operated to demonstrate that the audit log trail or the audit log feature was functional, operated, and was not disabled. Now in this case, what do you suggest to this C as regards this requirement? Okay, yeah. So now, in order to demonstrate that the audit trail feature was functional, operated, and was not disabled, company would have to design and implement specific internal controls, which are all about IT controls, which in turn would be evaluated by the auditors. So if you want to have a list of internal controls which may be required for such implementation and operations, what is that? First, controls to ensure that the audit trail feature has not been disabled or deactivated. Okay. Controls to ensure that user IDs are assigned to each individual and user IDs are not shared. Next, controls to ensure changes to configurations of audit trail are authorized and logs of such changes are maintained. Next, controls to ensure that the access to audit trail and the backups is disabled or restricted, and the access logs wherever the audit trails have been accessed are maintained. Next, what will be the control? To ensure that periodic backups of the audit trails are taken and those are archived as per the statutory period. Okay, yeah. Now let's look at the next one. UV Limited, it's a large multinational company, and due to the voluminous business that this company has, it has in-house internal audit function. To monitor day-to-day operations of the company. LK and Associates, a chartered accountant firm, have been engaged to conduct statutory audit for financial year 23-24. So we are looking at 23-24. Since the company has large scale operations and there's a limited time to perform statutory audit, CAL engagement partner decides to take direct assistance from the internal auditors for certain areas of audit. CAL assigns the audit documentation itself to one of his audit assistants and instructs him to do the requisite documentation of working papers. Further, he tells his audit assistant not to document the working papers prepared by the internal auditors who directly assisted them because it doesn't form part of statutory audit. In this case, as regards this entire understanding and what CAL is getting the documentation, is CAL right in excluding the working papers which are prepared by the internal auditor? Okay, so you need to guide him as to the matters to be included in documentation in relation to statutory audit in this scenario. Now here again, which standard you think will apply? Same. Okay, so using the work of internal auditor, so that's the same standard you'll have to pick up. Correct? Okay, so I think Saminathan has answered this. He's saying it's not appropriate on the part of this CAL. It should be a part of the documentation. Okay, so if you look at 230, so that's the basis which he has picked up. Good. Now let's look at this. So if you look at auditing standard 610, if the external auditor uses the work of internal auditors, external auditor shall include in the documentation what? First, evaluation of existence and significance of threats to the objectivity of internal auditors. Level of competence, again very important. Next, basis for the decision regarding the nature and extent of work performed by internal auditors. Next, here who reviewed the work performed. Of course, that's something you'll require in the documentation. Date, extent of that review. All of this is required to be documented. Otherwise, how will the documentation be complete? Okay. Further, written arrangements have to be there. So there has to be an engagement letter, which is between the entity and the internal auditors, and working papers prepared by internal auditors who provided this direct assistance on the audit engagement. So therefore, in the given situation, CAL, who decided to take the direct assistance, okay, and who instructed not to get that documented. Yeah. So in that case, that is not appropriate. Auditor is required to document the working papers. Okay. So therefore, the approach which he has picked up, that let's exclude it, will not be appropriate. Okay. So that's not something which is appropriate. Why? Because if you go with that, your documentation will be incomplete. Yes or no? Because some work is being done by a person. So whether that person is allowed to do that or not. So that's the first thought. Okay. And second, if some person is working some work and you don't document it, So that is not considered to be done. So that is something you will consider as not done. That is incomplete. So if tomorrow these files are looked at, that part is missing and that will be considered to be not there. Okay. Yeah. So that means in a way the audit is not completed. Yes or no? Yeah, which is not appropriate. Clear of this? So I think with this, we can just wrap up our discussion in relation to internal audit. Now what we can do is, now we can move on to this next part. Okay, so now I'll move on to the next part, that is about group audit. All right, so just give me a minute. Let me just open the presentation. All right, so now let's talk about group audit. Okay. See, when it comes to group audit, basically we are talking about audit of consolidated financial statements, right? Yeah. Now, there are few terms which are important for us to understand. So what we'll do is we'll just try to understand some of those terms, some of those concepts to begin with. And then we'll get on to the auditing aspects as well. See, when it comes to this requirement of group audit, so basically we are looking at the financial statements of a group. Now, what is a group to begin with? Let's understand. What is a group? Okay, so now if you look at a group, just a minute. So let me just take you to a working file. Just give me a minute. So let's pick up a working file wherein we can discuss all of these requirements. Say there is a company PQ Limited, right? And it has got some subsidiaries, associates, joint ventures. Like Saminathan mentioned that it may comprise of JVs, subsidiaries, associates. Yes, exactly. So that's what you call as a group. So that's a group for you, right? Now, in relation to a group, what do you have? Let's suppose there are two subsidiaries, S1, S2. there's an associate, and there's a JV. Now, it is not necessary that when we are talking about a group, so it should have each type of entity in place. It may have only subsidiaries, it may have only associates, it may have only JVs, it may have only associates or JVs, or only associates or subsidiaries. Yeah. Further, there's no number which is defined that it should have only maybe 10 group companies, 20, 50. No specified number is there. All the companies with this relationship, you can say, comprise a group. Okay. So this is what you call as a group. So it's a group. Okay. Now, in case of this group, what do you have? Each company preparing its own financial statements. So if you look at PQ, it must be preparing its financial statements. S must be doing that. S2 must be doing that. A must be doing that. JV Limited must be doing that. Okay, they are preparing their own standalone financial statements. On the top of it, you can say the main investor. By main investor means the one who is having control or joint control or significant influence over these group companies, which in the given case is PQ Limited. You can call it as the company or the parent company for subsidiaries. Will be responsible for preparing another set of financial statements, which is called as CFS. So it will prepare its own financial statements. Along with that, it will also prepare CFS, means consolidated financial statements. What is the meaning of consolidated financial statements? So we can say it means financial statements of all the companies within the group. You bring them together. You can say, you will consider as if all these companies are not 5 companies, but actually it's a single economic entity. You will consider as if it's a single economic entity. Now, this is not something which the auditor will do, but the auditor needs to have this understanding. This is required to be done by the management. Yes or no? Auditor needs to have this understanding about what the management is required to do. In this case, this single economic entity premise is very important. Why? Because once you have the clarity of this premise, then the various aspects which the entity would have covered in relation to preparation and presentation of consolidated financial statements will automatically become clear. Okay, so that's why what we will do is we'll just try to understand these consolidated financial statements by considering this premise, right? Now, when it comes to preparation of console, actually what we are required to do is we are required to bring together financial statements of all these companies at one place. Why? Because we are considering all these are not various but one single economic entity. Yes or no? So that's the basis you are following. Correct? So that's where auditor will have some requirements. One, of course, will be the requirement related to the accounting standards. So how will he audit? He will have to audit by looking at the respective accounting standard as to what does that respective accounting standard require, okay, in relation to the company. So that's something which the auditor will have to consider. Yes or no? Now, in the consolidated financial statements, what will be the various components? See, the components which you will have in any financial statement will also be there in case of consolidated one. Balance sheet, P&L, cash flow, okay, statement of changes in equity, and of course notes. So when it comes to CFS, its components are similar. Its components are no different from what you'll have otherwise, right? Over here, the only thing is, to all of these components, you'll add a sort of prefix. Consolidated. Okay, so you'll call this balance sheet as consolidated balance sheet. P&L as consolidated statement of P&L. Okay, so that's what you'll do. And other than that, of course, you'll have a consideration as to what do you include, what do you not include. Because eventually that's what you will also be required to audit. Now, as an auditor, let's try to understand what is going to be your approach. Okay, so some of the factors that you will consider while auditing the consolidated financial statements. For this, I think it will be appropriate if you can just put down some of those requirements, okay, by preparing the consolidated financial statements enough. Okay, so now when you prepare the consolidated financial statements, so what do you have? Just a minute. So what do you have when you prepare that? So let's suppose there are two companies. One is H Limited and second is S Limited. Or let me just call it as S1 Limited and S2 Limited. Right? Now H Limited is an Indian company. S1 is also Indian. This is a foreign company. And we are looking at subsidiaries right now. So Indian company prepares financial statements as per INR. Foreign companies does this as per USD. Right? Now, in this case, if you look at the trial balance, because for a subsidiary, what do? You'll do line by line addition. So you'll pick up the trial balance. So what do you have? There will be various assets. Then of course there will be various liabilities and various P&L items. Correct? So this is what you will have. Now, in respect of some of these items, okay, which you will have, as an auditor, you would say that this financial statement of S2 will have to be converted from USD to INR. Yes or no? So this is what the management would want. They would have done. Now, it's not necessary that this audited version will be available to you in the form of converted financial statements. Maybe this conversion is done by the parent company at the time of consolidation. Okay, so that conversion or the impact of conversion is something you'll have to audit as an auditor. Yes or no? Yeah. So therefore, if you look at the consolidation, so you'll have A, B, C, D. Now, what is going to be the next step? Will be A plus B plus D. So that's the thing you'll have, correct? In terms of the version which is available to you. Now, let's talk about the audit requirements. So what all audit requirements will have? One, audit of gap adjustments, which will be from USD to INR in terms of conversion, plus because a different gap is being followed by the foreign company. So all those gap adjustments, who will audit? Yes or no? Who will audit? So that's what you'll have to look at as an auditor. Yeah, it's the parent who is doing this. So the audit of the parent company will have to do this. So the audit of the parent company is called as central auditor. Okay, very commonly that's the term, or you can say the parent auditor, auditor of the parent company. Yeah, so that's one. And all of these group companies, what do you call them as? Components. They are called as components. So audit of the components will also be required to be done. Yes or no? Correct? No. Sometimes what may happen is components are audited by the same auditor. Means auditor who is auditing the parent is also auditing the components. Sometimes these auditors may be different. Yeah. So if same auditor is there for all the companies, then of course it's good. But at the same time, there could be some challenges in terms of meeting the timelines. Yeah, because maybe the group is too large, and for a single firm to audit all of them within the required timelines may not be possible. So that's why different auditors could also be placed. Okay. Then, as regards this consolidation, what will the parent require? Alignment of accounting policies, alignment of reporting periods. Yes or no? Yeah. So this alignment which is done may have some adjustments at the consolidated level. Correct? So as regards that alignment which is required to be done at the consolidated level, somebody will have to audit that. Yes or no? Yeah. So it's good. So Saminathan is also sharing this. He's saying harmonization of accounting policies and the reporting period is required. Yes, that's correct. He's saying then another thing is required, that is about elimination of intra-group balances, elimination of unrealized profit, goodwill, capital reserve. All of these adjustments will be there. Correct. And all of these adjustments, do you find that in the standalone financial statements? Answer is no. All of these things pertain to the consolidated financial statements only, right? So therefore, if you look at elimination of intercompany transactions or balances. So we'll require that. Correct. Fifth, elimination of any unrealized profits. That's again you will require. Yeah. Now all of these things would have been done by the management already. Correct. As an auditor, what is it that you are required to do? You are required to look into whether that has been done in an appropriate manner or not. Yes or no? Yeah. Swaminathan says there will be one more adjustment, that because we have a foreign subsidiary, so we'll have to convert that to the INR financial statements and some gap adjustments. Yes, so that's what we have covered. Huh? Okay, so that's what we have covered. Now what else you'll have? At the time of consolidation, you'll also have some adjustments related to goodwill, capital reserve, NCI. Correct. Now, all of those adjustments, all of those workings, who will audit? That will have to be audited by the parent. Okay. Yeah. Central auditor. So it's not something which the component auditor will do. It's something which the parent will be required to do, and therefore the auditor of the parent company will be required to do. Yes? Yes or no? Yeah. Now, what else do you have? See, the other thing will be when it comes to the consolidated financial statements is about the assessment of the group companies. Yeah, within the group, when you are preparing the CFS, which all companies will fall, means what will comprise of group? If let's suppose the management is considered only 19 companies, let's suppose two have not been covered. So you need to have the completeness of the group in place or not? Yes or no? Yeah. Because then the consolidated financial statements may go wrong. Correct? Next. Now, when it comes to the scoping, now what will happen? Component will be auditing the financial statements of the component. Let's say we have this H Limited sitting as the parent. S1 Limited is one subsidiary. S2 Limited is second subsidiary. Now, in this case, when we look at these two companies, okay, now what are the other aspects which the auditor needs to consider? So say this is the parent auditor, this is the component auditor. Now, because the component is being audited by some other auditor, so that's why parent would like to understand as to what the other auditor has covered. Yes or no? They would like to have some clarity on that. And they may also have some expectations from them. All of these things could be there. Yes or no? Now, how do you achieve that? That is achieved by having a communication. Okay, so now it's important that these parties interact with each other in terms of their expectations and in terms of their activities. So generally, as a process, what will happen? Parent will roll out a set of instructions. To whom? To these components. Wherein the parent will ask the components as to what is required to be done. Okay, so it's a detailed set of instructions which they will roll out. So the parent may also specify any focus areas. Parent may also define the significant risk areas which the components need to consider. So thereby what will happen? Because eventually it's the parent that is going to opine upon the consolidated financial statements. So that's why if there is anything which is important, which the component is having in relation to the consolidated financial statements, will be brought to the knowledge of the parent and which the parent can address while issuing the audit upon opinion at the consolidated level, right? Now, how will this objective be achieved? That's where it's important that these parties communicate with each other. Okay, wherever required, of course. Because through the communication, what will happen? They will have a clarity of what is required to be done, how is that required to be done. If there are any challenges, they can talk to each other. They can discuss that. And in terms of the reporting requirements, the report which the components will provide, okay, some of the observations they will provide, they will also be able to pass through, communicate effectively as to what is the observation, why is that the observation, which the parent can also then sort of address and interpret appropriately at the consolidated level. Yes or no? Now, in some of the cases, what may happen is some of the components may be very insignificant at the consolidated level. So therein the parent will decide the scope. Whether this component is required to be audited, whether this component is only required to be reviewed, or maybe there is another component wherein only limited procedures are required. So who will decide this? It's the parent auditor who has to decide. Okay, and all of this thing will be communicated in the set of instructions which the parent will provide to the component. Okay, so this one again is a component. Now, when it comes to the reporting, now one must understand the fact that this reporting by the component auditor is not to the management of the respective companies. No. See, they are engaged by the company, no doubt. They will be paid by the company, no doubt. But the report which they provide will be provided to the parent auditor. Okay. So you can say management has engaged them on behalf of the parent auditor. So in a way, they are nothing but an extended arm of the parent auditor. Okay. So that level of independence therefore becomes important on the part of component auditor. Sometimes what may also happen is maybe the parent has decided some of the significant risks for the components. maybe the level of scoping which the component is having is reduced. But the component auditor also happens to be the statutory auditor. So that's why they will have dual purposes. One to audit for the group, for the parent auditor, and other one is to audit as per the statutory requirements. Okay, so therein they will have to decide that at two places, two different reports are going out. And accordingly, they need to pick up their audit approach. Okay, so that's how they will have to design their audit procedures. And that's how they will have to leverage some of the things which they will be performing maybe in respect of statutory audit and can use for the group audit purposes or reporting for group audit purposes and vice versa. Correct? Clear on this? Yeah. So these are some of the aspects I think which are important for one to look into as regards the group audit is concerned. Now to further have more clarity on this, what we can do is we can just now pick up some questions and through those questions we'll try to practice this aspect as well related to group audit. Okay. All right. So now let's move on to those questions. Okay. So let's look at the first one. CAM is the auditor of consolidated financial statements of D&D Limited for the year 23-24. Consolidated financial statements consist of financial statements and financial information of 8 subsidiaries. So we have 8 subsidiaries covered over here. And those 8 subsidiaries are audited by other auditors. Means this is the parent auditor and you have component auditors which are different. Such financial statements, financial information, and the auditor's reports of subsidiaries have been furnished by the management of D&D Limited to him. Following further information is also available in respect of these 8 subsidiaries for the financial year 23-24. What is that? Total assets are 1500 crore. Total revenues are 1000 crore. Net cash outflows 10 crore. 2 of these subsidiaries are located outside India. Okay. And that's why what do you have? Their financial statements, they have been prepared in accordance with the GAAP, which is applicable in those countries, which is other than the GAAP that you have in the case of parent company. Okay. And they are being audited by the other auditors under generally accepted auditing standards, again, which are applicable in their respective countries. Means the essays are different. Yes or no? Where and how should such information be included in the independent auditor's report as regards the consolidated financial statements of the company? Also, draft a suitable para by making necessary assumptions. Right? Yes. So in this case, how do you report this? So that's something we are required to now look into. Okay. Yeah. So let's look into this. I think I have one response from Saminathan. He is saying you'll have to go by SA 706, which talks about other matter paragraph. All right, very good. So now let's look at this as to what will you do? See, where the parent's auditor is not the auditor of all the components, that's where you'll have to apply SA 706. If the auditor considers it necessary to make reference to the audit of other auditors, auditors report on the consolidated financial statements should disclose clearly the magnitude of the portion of the financial statements audited by other auditors. This may be done by stating aggregate rupee amounts, okay, or the percentages of total assets, revenues, cash flows, okay, so some of these financial information, okay, wherein the parent auditor will specify that these are the components which are having this much financial, maybe this much revenue, or as a proportion of total revenue, or maybe this much assets as a proportion of total assets, which are not being audited by the parent. So he'll just, sort of exclude that. He'll disown that this is not what I have audited. Okay. Where do you include it? Other matter paragraph. So let's understand the language you'll use, because that drafting is also required as a part of the question. So what do you report? So how do you draft it? So we'll say we did not audit the financial statements and other financial information in respect of 8 subsidiaries, whose financial statements include total assets of 1500 crore, total revenues of 1000 crore, net cash outflows of 10 crore. Okay. These financial statements and the other financial information have been audited by other auditors. So at one place, parent auditor says we did not audit. Then they are saying these are audited by other auditors. Okay. Further, they will clarify, see, this other information and the auditor's report have been furnished to us by management of holding company. Okay. Now, when it comes to the opinions, they will say our opinion on the CFS, okay, insofar as it relates to aforesaid subsidiaries, is based solely on the reports of such other auditors. In a way, they are saying that we are just simply relying upon what they have given. So you can say this is the only auditing standard wherein you can say the auditor is allowed to rely upon the work of some other party, right? Over which you see a lot of debate, discussion is still going on, right? Now, there's another challenge here. What is that? Two subsidiaries are located outside India. Correct. Those subsidiaries are following a different gap, number one. And the essays over here are again different. So they are audited, but auditing standards are different. Now what will happen? Holding companies management is converting their financial statements from respective gap to, you can say, the gap applicable in India. Ind AS, we can say, right? So the gap adjustments are going to arise. And is there any auditor who has audited these gap adjustments? No. So that's why who will have to audit this? Parent auditor will have to audit this. Okay. This again, he will specify. We have audited these conversion adjustments made by the holding company's management. Okay. Further, auditor says our opinion on the CFS and our report on other legal regulatory requirements is not modified in respect of above matters. So he's not saying it's a qualification. Okay. He's just saying that it's like we are relying upon their work. Okay. But that doesn't mean it's a qualification. So he's just simply saying that it's a sharing of responsibility which has happened as far as this particular audit is concerned. Yeah. So his responsibility is being shared by other auditors. Okay. So that's the aspect which he's just trying to convey. Clear on this? Yeah. Now, let's look at the second one. A Limited holds ownership of 10% of voting power and control over the composition of board of directors of B Limited. So if you look at the structure, so you have A and B. So A's stake is 10%, but A has got control over B. While planning the statutory audit of A Limited, what factors will be considered by you as the statutory auditors of A Limited in relation to consolidated financial statements as per Ind AS? I think quite simple and something over which we have had a lot of discussions already. And I can see one response coming up. Very good. Saminathan says, since A has control over B, so despite the stake being only 10%, control is there. So Ind AS 110 accounting standard will get triggered. And what would it require? It would require consolidated financial statements to be prepared by A Limited. So what A Limited will be required is they will prepare their standalone financial statements, no doubt. They will also be required to prepare CFS. And in that CFS, they will have to consolidate B. Right? They will have to consolidate B. Right? So that will get triggered. Now, in this case, A holds only 10% of voting power, but has control over the composition of board of B. In such a case, A shall be considered as parent of B and therefore would consolidate B Limited in its consolidated financial statements as a subsidiary. So in this case, what is going to be the role of the auditor? First, to assess that whether the control is there or not. To begin with, that's what you'll do, whether it's unilateral control, joint control, significant influence, or something else. Okay, so whether this assessment of the management as regards the control is appropriate or not. So that's the first step. As an auditor, you will begin, right? Okay. Now, there can be various means by which such kind of control can be established. So now, auditor will have to verify the board minutes, shareholders agreement, if any arrangement with B Limited, Okay. So what is the objective? Objective is to, of course, assess whether the control is there or not. See, management has done that assessment, but the auditor is checking that assessment. Okay. Now, auditor should verify the adjustments warranted by Ind AS 110. When it comes to preparation of CFS, which is required as per Ind AS 110. So you can say it gives rise to permanent consolidation adjustments. So there are two types of adjustments that will arise. Permanent consolidation adjustments, and of course, adjustment will arise year on year, which will say as current period one. So auditor will have to have a plan to audit both of these adjustments. Yes or no? Yeah. So audit procedures as around the nature, timing, extent, all of these things will have to be planned. Further, duties of an auditor with regard to reporting of transactions with any other related parties. That again, auditor will have to review. Okay, to find out that whether B is a related party, that's good. But are there other related entities? It may have happened that there are some other related parties, but that those have not been considered by the management of A Limited, and that may also fall within this purview of consolidation. So you can't really miss out on that. Yes or no? Yeah. So that is again important on the part of the auditor to look into, right? Further, in forming an opinion on the financial statements, auditor shall evaluate whether the identified related party relationships, transactions have been appropriately accounted. Okay, now again, that is as per the applicable accounting standards or the applicable requirements. Yeah. Now, moving further. Next one. You are appointed as auditor of Nawab Limited. It's a listed company, which is a main supplier to UK building and construction market. With a turnover of 2.9 billion, 2.9 billion rupees. Company operates through 11 business units. It has nearly 180 branches across the countries. As an auditor, how will you draft the report in case when the parent's auditor is also the auditor of all the components? Number one, when the parent's auditor is not the auditor of all the components, means you have two different auditors. Parent auditor is different, components is different. When the components auditors reports on financial statements under an accounting framework is different than that of the means components are following a different gap and their financial statements are made available, audited within that, using that gap. Okay. And the same goes with the auditing framework as well. Fifth, where the financial statements of one or more components are not audited. So many times you also get to see this, that by the time you will finalize, maybe some of the components are not audited. But at the parent level, at the console level, you can't wait for some of those components to close. Okay, so we'll have to wrap up because being a listed company, you'll have some different timelines as compared to the components, okay, which are unlisted, and that's why by the time if they are not able to wrap up their audit, so we'll have to go with the unaudited set. Okay, So now how do you report in some of these situations? See, when it comes to the reporting requirements, wherein the parent auditor is auditing all the, so then of course he's taking the responsibility for all. But when he's not the auditor for others, so the sharing will come the way we have discussed in the previous example also. Okay. When the component auditor is auditing a component, or you can say when a component is following a different gap and their report is made available using a different gas, that is a different auditing standard. So all of these adjustments will be picked up at what level? Parent level. So the parent auditor will have to audit them and specify in his audit report. Okay. And same goes with those components which are unaudited. So this will have to be sort of dishonored. Okay. So in the other matter paragraph, parent auditor will specify that these components with the given volume, that financial information you will specify revenue, assets, cash flows, that these are unaudited. The way we have covered that in the previous question also. Okay. So let's look at one more. M Limited acquired 51% shares of S Limited on 1st April 23 and sold 25% of these shares during the financial year 23-24. So if you look at the chart, we have this 23-24, 24-25. Let me just put down this information as well. Okay, so 1st April, 51% was acquired. And during the year, so they have not specified the date, maybe sometime over here, 26% is sold. Okay. Sorry, 25% is sold. So 26% is now left. M Limited did not prepare CFS for the financial year 23-24 on the plea that control was only temporary. Do you agree with this view? Decide assuming that M is required to prepare its financial statement. So you need to look at the requirements of Ind AS and accordingly comment upon this. So now, see, this is more of an accounting answer, isn't it? But as an auditor, this becomes important for you because you need to have a clarity in terms of what the accounting standard requires. Correct? Now, Swaminathan says it's no, because as per Ind AS 110, even if you have a temporary holding, there is no exemption from preparing the consolidated financial statements. Okay. So therefore, now what do you do? As per Ind AS 110, there is no exemption for a temporary control. See, you have such sort of requirement under Indian GAAP, not as per Ind AS. Okay. In the given case, M Limited acquired 51% shares of S and sold it during the year, some portion, and did not consolidate. Yeah. Even though their intention was to hold it for a temporary period, because there is no such exemption available. Okay. So that's why consolidated financial statement should have been prepared. Yeah, so in this case, the contention of the management is not appropriate. Right? So let's look at the next one. R is a listed company engaged in manufacturing of round bars. Company is having investment in following components. There are various components. 2 subsidiaries, 1 JV, 2 associates, 3 entities under common control. Then you have interest in assets, liabilities. It's a joint operation. R and all its components are required to, so they follow Ind AS. While preparing CFS, R consolidated its components on a line-by-line basis. All these. Now the company, the management seeks your advice on the accounting treatment again. Whether this line-by-line addition which they follow is appropriate or not. I think it's a straightforward answer. Yes or no? Yeah. Yes or no? It's a straightforward answer. So whether the accounting practice which they are following is appropriate. Swaminathan says no. That's meant for subsidiaries only. Yes or no? That's meant for subsidiaries only. But in the group, they have got JV, they have got associate, entities under common control, then this joint operation. For these entities, can they follow line by line? No. Okay, clear on this? Next, CH was appointed as statutory auditor of MNL. It's a listed company which has got 3 subsidiaries. M, N, L. They've got 15 branches. Auditors are duly appointed for all the subsidiaries and branches. What should be the considerations of CAH regarding a determination of materiality during the audit of CFS? How should he deal in his report if there are observations? For instance, modification, EUM made by the component auditors. Again, we'll have to go by the materiality at the group level. Yes or no? Now, in carrying out the audit of financial statements, what do? Computation of materiality you'll do at a group level first, and then you will pass it on to various components. Yes or no? So that's what you will do at a group level, and then you will pass it on. However, with regard to determination of materiality during audit of CFS, auditor should consider the following. What is that? Compute materiality for group as a whole. Okay, that's one. Parent auditor can also use materiality computed on the group level to determine whether the components' financial statements are material to the group or not, and accordingly decide on their scoping. Principal auditor also computes the materiality for each component, and that is what is communicated to each component as well. Principal auditor obtains certain confirmations from component auditors around what? Independence, ethics, some of these requirements. Okay. So now, what will happen when the component auditor will be reporting upon, let's suppose, some modifications, EUMs, etc. So that's what they have done on the basis of their component, on the basis of materiality of their component. So now how will the principal auditor will deal with them? They will have to consider the group materiality while dealing with that. Correct? Clear on this? Yeah. All right. So with this, we are through. Thanks everyone once again for your time today. And thanks for this participation. Thanks so much. We can close this session now. Manish, we can close this. Done. Thanks.